there are signs of a slowdown in economic and international trade growth. This is bad news for the parts of the logistics industry which are vulnerable to overcapacity. Published in April, the WTO's forecast of global trade growing at over 6% in 2011 already looks a little optimistic. Signs from the leading economies that domestic growth is slowing imply that world trade is not quite returning to the normalcy that many had hoped for. This has serious implications for many logistics markets. Our first chart compares purchasing managers' indices around the world. These are indicators of confidence in the world's economies. The fall in the latest Purchasing Managers' Index from China is being interpreted as an indication of the effects of the tightening of monetary policy in the face of rising inflation. Although the monetary conditions in the US are quite different, similar data are also suggesting a marked slowdown. The lead economy in the Eurozone, Germany, is still putting in respectable growth figures, but they are less impressive than in 2010. Just as bad for the logistics sector, purchasing managers' indices in all of these economies are showing that inventories are rising. The problem is that parts of the logistics sector are particularly vulnerable to any sort of slowdown in growth. Our next chart shows that the container shipping rates have softened, with the China-Europe trade seeing rates halve over the past year. This is a combination of volumes not living up to expectations and the injection of new capacity on this trade lane. This is likely to be as a result of the ultra-large container ships which have been introduced in the past year. It should be noted that some trade lanes are doing better than others. As you can see, China to the west coast of the US has shown more resilience in the past 6 months. Similarly, volatility exists in the air cargo market, as can be seen from our third chart. On May 30th, the Association of Asia-Pacific Airlines said that its members saw a year-on-year fall of 2% in air cargo volumes in the region last month. This occurred at the same time that available capacity increased, having the effect of pushing down rates. The contract logistics sector may also begin to suffer as the automotive industry comes off the boil. New car markets in the West remain subdued, whilst China may even see a fall in sales. This would be bad news for the German car producers who have been riding a wave of demand from China. Consequently, contract logistics providers may see some pushback in their recovery. And then there are fuel prices. As our final chart shows, these have softened slightly over the past month, but are still firmly over $100 a barrel and show no signs of substantial falls. So far, the implication is of slowing growth rather than another recession. However, the effects of the logistics industry could be amplified by oversupply in a number of key markets. This may reveal that the experience of 2010 was more of a breathing space than the start of a structural long-term recovery.